I want to welcome everybody for the Chapter 3 for the intermediate class. This time we're going to cover the balance sheet, and we will cover the asset side in this video. And the first thing you need to do is put the name of the company down, the balance sheet, and a particular date, which in this case is December 31st, 2016. And like I said, we're going to do the assets, and there's a couple types of assets. We have current assets, which are assets that will be converted into cash or used up within 1 year. Then we have long-term investments, and this may be a new section for people. Long-term investments are just that. They're investments that you have in other companies, investments you may have in officers, but we'll have a couple examples of those. And then we have property, plant, and equipment, which you also notice I have fixed assets off to the side in parentheses because it's also known as fixed assets, and a lot of companies still use fixed assets. Then we have intangible assets. Intangible assets are ones that you have control over, but you don't physically own anything, and we'll give some examples of that, and we'll go over that a little bit. And then the last category is other assets, and these are assets that don't fit in any place else, which we'll cover in a second. Okay, so some examples. These are just examples of the current assets. When the current assets are used up within 1 year or converted into cash. Well, it's listed by order of liquidity. So your first one is cash, and that's going to be $13,200. Now the numbers I make, I'm just simply making up. So don't try to find them. Actually, this whole thing I made up. Current assets. Next one we have will be investments in marketable securities. Now, these are ones that you have, a lot of times they're classified as trading securities. These are the securities that you purchase with the intent of selling them in the near future, and that's what it's based off of, is the intent. Okay. Then we have receivables will be next if I can find them. That's just my heading. I'm going to leave that in there. But receivables, we have a couple types of receivables. We'll have notes receivable, so notes, and we also have accounts, which is up there. Okay, and notes receivables, I'll make $21,350. Accounts receivables, $53,600. Remember, the difference between notes receivable and accounts receivable is that on a note, you've signed a piece of paper saying you promise to pay it, and an account is just that. It's an account. Okay. Receivables. Oh, then we have the less for allowance for doubtful accounts, which I put in there. And that's going to be another $24.50. Okay, so this is just the summation of these three numbers here will be the summation of that. Okay, so that's part of it. Then after now those are just the receivables. There are other receivables you could have in there too. You have interest receivables and that type of thing. Then we'll have inventories is next. And this is for a manufacturing firm. So we have three types of inventory. You have raw materials, you have work in process, and you have finished goods inventory. Okay. The raw materials inventory we're going to make as 16,800, 26,000, and 43,000. Okay. And this will be just the summation of those three. Okay, now this, like I said, this is a manufacturing firm. If it was a merchandising firm, all you would have would be finished goods inventory, or raw material, or just material inventory. So you just have the product that you'd be selling. You wouldn't have three different inventories. Okay. Then we'll have prepaid expenses. And under prepaid expenses, we'll have insurance. That's prepaid insurance for some. We have supplies. and we have maybe rent. Okay, those are my prepaids I had. And we have 3,800, 800, 1,600 for a total of, we'll do the summation thing here, 6,200. Okay. Now, normally previously you had prepaid insurance, prepaid supplies, and prepaid rent. This is another way of doing it. We're just showing you some alternatives that you can have. And then after you have this, you have the total current assets of 196,200. Okay. Those are just examples of current assets. That's your main current assets. Sometimes you may not list the prepaid expenses. You just have a list. You just say prepaid expenses, and you'll put 6,200 down. So it depends on the form that you actually use. Now, long-term investments are investments that you may have in other companies, or it may be advances to officers and loans to officers and that type of things, ones you plan on getting paid back. So first one will have investment in available for sale security. Now, your book may say, available for sale. It could be some other ones. It could be marketable securities, long term. Later it will be that, but that may be, I think, the next class. Then we also have investment in held to maturity. Those are held to maturity, has to be bonds. Otherwise, they don't mature. Common stock doesn't mature. And then you could also have an investment in common stock. In Acme Common Stock, you have the company, and then we purchase common stock in another company. Because remember, we're Earth Car, and this is Acme Common Stock. So it's an investment we have in another one. And then we also could have a different type of account called a bond sinking fund. Okay. Now you may ask, what is a bond sinking fund? That is money that you put aside, or some kind of an asset you put aside, so that when your bonds mature, you have the cash to pay off the bonds. And sometimes that is required. So we'll make this 19,000, 14,000, 28,000, and 45,000. And again, we'll sum those up. So auto sum, and that'll be those right there for 106. Okay. Now this one you've had in financial accounting. It was property, plant, and equipment, like I said, also called fixed assets. So the first one we'll start with is land. I'll just type that in because it's about as fast. Then we have building. And then we will have equipment. And then we'll have vehicles. Okay, I'm setting this up a little bit different than what you've had in the past, is because what I'm doing is I'm going to put all the depreciable assets together. So that's 27,750, 168. Got to get another zero in there. 123. And vehicles, I'm making this 42,000. So this one is going to equal total depreciable assets. And that's the total that we have from above. Okay. So that's those three, which is 333,000. Okay. Then, like you normally would have, you'd have less accumulated depreciation of 189,500. And then we add those two together. Gives you 143,500. Now this is a little different because what you had in the past was you had equipment, less accumulated depreciation, vehicles, less accumulated depreciation, buildings, less accumulated depreciation. But the other alternative is to list all the depreciable assets together, gives you total depreciable assets, and then combine the accumulated depreciation. Because the idea for this is that you have to give out information, but don't volunteer anything. Okay? So, and that's what we're doing here. We're making the guidelines, but we're not volunteering any information. And then we have intangible assets. Well, these are assets that you can't physically touch. So they're just rights mainly. And one example would be patents. If I can find it, there it is. Okay, we use the net, which means you amortize some intangibles are amortized. You'll get this later in the semester. Others, and when you amortize it, you reduce the asset itself, which is a little different than what you have in the plant and equipment. Copyrights is another one. You net those out. You can also have trademarks. And then we have another one called goodwill. I put the goodwill in there because goodwill is kind of interesting, or I think it is, in that goodwill has to be purchased, but you cannot sell it. And goodwill is created when you pay more than market value for something. And I just realized something. I don't have any value down for goodwill. Yeah. So what I'm going to do is make this one 4,600 and make this 3,000. And that gives me my 11,900. Okay, that'll work. Which means I forgot to there. That works. Okay. So that adds up to 11,600 for total intangible assets. And that goes down one. There we go. Okay. Now, other assets. Other assets are the ones that don't fit anyplace else. An example of that would be basically your deferred tax asset. And it's another category. If it doesn't fit in the other 4 categories, it goes into other assets. And this is going to be 1,300. So total assets then will equal all of these added together. And that's because I got carried away with it. So we'll try this again. There we go. 486,710. Okay. That is the asset side, real quick. But your main ones are current assets. What you had before is current assets and plant and equipment. And we've added long-term investments and intangible assets and other. So hope that helps. And like I said, the next one will be the liability side, and I'll start here.